Good morning, everybody. Welcome to the second session, our Wealth Protection series by Prudential Life. Please let us know where you're joining us from. Karibuni sana. Karibuni sana. Let us know in the chat box where you're joining us from. We are about to get started, just waiting for a few more of you to join. Where are you joining us from? Welcome, everybody. We will be starting this second session on the protection series by Prudential Life in a few minutes. But yes, welcome. Thank you for joining us. Someone is telling me they're joining from rainy Nairobi. Yeah. Karibu sana. Who else? M is joining us from rainy Nairobi. Welcome, everybody. Who's joining from a different town? Karibuni sana. Let us know in the chat box where you're joining us from. Machakos. Is it raining in Machakos? Welcome. Nairobi, welcome. Yes, welcome. Oh, it's also raining in Machakos. Looks like it's raining everywhere. Lynn is joining us from Ethiopia, Busia, Beijing. Wow, Stacy. Karibu sana, Kajiado. Kisumu, well represented. Karibuni sana. And also let me know in the chat box what you're looking forward to learning today. We know this is a protection conversation, but is there something specific you would like to know by the end of this session? All of you, let us know. So yes, let us know where you're joining us from. And secondly, what you'd like to know or to be able to understand by the end of this session. How would you know that, this was a good session? Let us know so that even as we're having the conversation, we put you into consideration. For anyone who has joined this because of the protection conversation, let us know why you're joining. M from rainy Nairobi, tell us why you're joining today. Vic as well, George, let us know. What are your expectations of today's session? Cliff, yeah, Stacy from Beijing, let us know. What are you expecting from today's session? M wants to know if Prudential allows contributions for whole life cover in USD. That's a good one. Thank you, M, for that question. Who else has an expectation, what they'd like to know? Remember, this is a very important conversation, and the reason why we are here is to be able to cater to you and just answer all the questions that you have or you've always had. If you also have a whole life cover or you've been in this protection journey before, let us know how your journey has been. Let us know. Let us know. Let us know. We're starting in like about 2 minutes. What are your expectations of today's session? Also, if you have a protection plan, let us know in the chat box what you'd like to know by the end of this session. Whether it's us having gone through the journey of protection, just let us know. We're about to start. Let us know. Welcome everyone who's joining in. Tell us where you're joining us from. Welcome. Welcome everybody. Awesome. Thank you everyone for joining this session. This is part 2 of the protection series by Prudential Life. We are here to be able to bridge the gap between building wealth and protecting wealth. What is very important is for you at the end of the day or at the end of this session to have more clarity on your journey, your overall wealth journey, and where protection comes in. So that is why we are here today. And I would like to introduce myself, and then our guests will introduce themselves shortly. So my name, for those who don't know me, my name is Ndote, and I am the founder of La Risk Africa. And we focus on the protection and preservation of family wealth. That is our area of specialty, because one thing we noticed is a lot of Kenyans, a lot of Africans just think about making money, building wealth, but nobody ever thinks of what is the continuity plan of this wealth that I'm building and what is the protection plan. So how I like to put it is, even as you're building a house, or if you're even living in your house, are you comfortable living there without absolutely no fence or even a security guard? So even as you're going through your wealth journey, it's so critical to understand that sometimes life does happen. And it's also important to make sure that you have created the right structures to ensure continuity of that wealth. I think it will be very sad if you've been building for such a long time and then one situation happens and it wipes away all the wealth that you have. So the biggest and most important thing is for you to focus on the journey. So what we do and what it is that we focus on is, okay, this is your journey. Where does protection come in? Yeah. And the reason why I am so passionate about this, having done this for over a decade, actually being in the protection field, is because yes, we would love to protect families, but life insurance also has been something that has come through for me on a personal level. And I would love for more and more families to just understand how this works and how exactly it fits in their overall wealth portfolios, because it will be quite unfortunate, as I said, to just focus on building without protecting, right? So that is me in a nutshell. And I would love to, bring in Silas, then Barak shortly to just tell us a bit about themselves and why they're here. Yeah, we are here to overshare. Remember, there is no question that we're not going to answer. I would love you to also put us on the hot seat. You know, when they say that, oh, insurers are opaque, we do not like to answer questions. So today I give you the permission, yeah, to ask us any questions. And yes, I would now hand it over to Silas, and then we go to Barak. Let Silas introduce himself. He's someone who we have worked with for a very long time, someone who I also really admire how he does the structures and how he has the protection conversation. So let me hand it over to Silas to tell us a bit about himself and why we are here and what we should expect from him today.
All right, thank you, Marianne. Munyendo, I really appreciate it, and always a pleasure to share these spaces with you. My name is Silas Ndote. I work with Prudential Kenya as the head of development for Kenya. That is the entire of the financial advisors for Kenya. And I am a seasoned protection specialist as well. I've been in the business now for the last 21 years. And yes, I know, Mnyendo, don't worry. I keep telling you that if you take enough aloe vera and neem, you will remain as young as I do. Um,
Please, you tell us the secrets.
yes, yes. So the reason why I'm here today is just to share more about and to demystify,
Yeah.
all the mysteries and opaqueness around what protection is all about, and just to bring in some light and to just be able to unpack the importance of wealth protection the protection in the wealth building journey. So where does it sit? Why is it important? And who should have it? So that at least by the time we we come to the end of this, my prayer is that we'll all be clear in our wealth building journey, the
Yeah.
importance of protection. Yeah. Thank you and good to be here.
Oh, thank you. Thank you so much, Silas. I would love to have Barak as well. Barak, are you here? Barak, karibu sana. Barak is one of our very good friends and also legends, and would love for Barak to introduce himself as well and let us know a bit about why he's also here today because as I mentioned, we're going to be going through Barak's journey in a bit, his overall wealth journey, his investment journey. We all know Barak. And yes, I will hand it over to Barak to let us know a bit about himself and why we're here today. And also if Barak would like to learn something from today's session, because I feel like it's it's also a session where we could all be learning from each other. So thank you. Barak, tell us. Karibu sana.
Thanks. Yeah. So, my name is Barak. For the purposes of this call, I guess I host a podcast called Financially Incorrect, and I work in the creative economy, in the strategy and content spaces. And I have a wife, and I have two daughters and a son on the way. So yeah, I have family, and that's what I think triggered my interest in life insurance. And so I'm happy to talk about my journey in this
Yes.
wealth protection, and happy to share. And yeah, I'm looking forward to learn. I hope I do learn a thing or two that I didn't know before.
Awesome. Thank you so much, Barak. And congratulations.
Thank you very
I'm
much.
sure it feels so good.
It does. Yeah, it
So
does.
we have Silas there with with his three ladies, three girls. Then we have Barak as well. Then I have two children, one who's 5 and 6. So we all are here having some level of responsibility. And I know the reason why, again, we're all here is because it is important to make sure that we have put our families in order. So I will just go straight to the questions, Barak, just as we now go through your journey. I want you to take us through, your reality as a man, um, as an investor and a provider, because you've told us you have your wife and you have your children who you're taking care of. And I want when you tell us, when you think about your life today and your work, your investments, your family, what part of that responsibility feels heaviest on your shoulders? Because I've been told that men feel the responsibility more than us. I don't know how true that is, but I know as a family man, you are looking at your babies, at your wife, and you know that you are here to, take care of them, love them. But how does that feel? What part of that responsibility feels heaviest? What's the thing that keeps you up at night?
Um, I think that answer had changed over time. I think there was life before the conversation you and I had, and there's life after the
Yes,
conversation that you and I had. And I think
yes,
before you and I had spoken, I guess
yeah,
the thing that would keep me up at night would just be the usual. How do I provide for them? How do I take care of them? How do I make sure that I'm able to put food on the table, ensure that we are able, and I do, by the way, I do all of my provision. I'm with
yes,
my wife. It's not
yeah,
like we work together to make the house
yes,
work.
yes,
So it's not that I was doing it on my own. It's just that the questions are around how do we ensure that
yeah,
the schools that we want our children to go to, we can go to. How do we ensure that we're able to go for family vacations, or
yes,
whatever the case may be? And
yeah,
then after the discussion that we had,
yeah,
then my eyes sort of were opened up to so we had been saving for their
yes,
education plans, and I think the exact
yes,
statement that made me think about it was,
yeah,
I think you had said a lot of
yeah,
people save for education, but they
yeah,
don't save for life and life fees and living expenses if something were to happen. And
yes,
so that's where the thought then came in around why insurance may be important for us and for me.
yeah,
So right now, I would say it's a little easier. I wouldn't say that thought is
yeah,
as nagging as it was before, because we did get the life insurance for both of us. So
Yes.
right now, I'd say maybe the things that keep me up at night are just how to improve life and how to live life better and how to be more present. Yeah.
Oh, I love that. I love that, Barak. And what you're saying is very true because I think we all focus on giving the best to our families, but nobody ever thinks of, will I even be here tomorrow to be able to ensure that this lifestyle does not change? Because I think the worst thing that can happen, especially when you have children under the age of 18, is in the case you are not able to provide for one reason or another. It doesn't even have to be necessarily a death, it could even be a critical illness. How can life still continue? And then I know, Barak, you are an entrepreneur, you are in business. Yeah, so it means then you have to make sure that everything it is that you are building is protected and minimizing that interruption. So maybe Silas can tell us a bit about now how it is that men in general, or just providers in general, how it is that they can just start having and thinking about this conversation, because now we are seeing here Barak is had to start thinking about it when, I mean, after we started having the conversation, because sometimes you never even think about it. It's not something that actually someone sits down and says, okay, now I have to think about, if I could possibly die or get a critical illness. It's not a very comfortable conversation, but it's a conversation we need to have. So, what are those maybe points of triggers that can come up in someone's life to start thinking about protection in general?
All right. That's a good question. Life is cyclical. Um, I like to say that there's nothing new under the sun. There's it's just different seasons, people experiencing life differently. But in general, in principle, things are the same. Many moons back, someone used to tell me, an old wise man used to tell me, right now, as a young unmarried guy, you're enjoying life carefree. Do some investments, put some money aside, because eventually when you want to settle, you'll realize a couple of things. And one of them is this. One is that as you grow older, there's a very high likelihood that you'll make more money than you're making now. Second is it will hit you hard and fast that you will have less of it. So yes, you're making more money than when you are younger, but you have less of it to use when you're older, because now responsibilities have kicked in. You're living in a single room, carefree. Then now you get married, you move to either a one bedroom or whatever. So as life continues, as children come in, your responsibilities as a man to take care of certain things then expand. They become bigger. I come from a home where we put money on the table with my wife, just like Barack. We take care of all the costs together. We run the home together. But I can tell you that anytime I feel like one of the income streams is strained, then I start going into panic mode, because then for me, I'm really hardwired to be a provider and to protect that space. And so do many other men when we have this conversation. So what are these triggers? Triggers would be, depending on where you are at in life, then you start looking at certain things differently. So for example, the first trigger is if you are not married, you're young, maybe you're in business or you're employed. So at this point, when we are having conversations around things to do with, if today you're not there, then you're thinking there's no one who will be bothered by this. Then think about more life being more valuable where you are alive but under different circumstances. So think about incapacitation, because that's even far much worse than death. You're alive, but your ability to make to eke out a living is gone. So that's number one. So that's the first trigger, to start thinking about, you are the greatest money maker, you are the greatest asset that you have currently, because without your ability to make that money, you have nothing, right? Two,
Yeah.
or rather still within the same space, or rather two would be, you're a family person. So you're looking at Barack and I and everyone on this call who's representative of that demographic. You've got people who depend on you financially. So if you're a family person, you've got certain things that are standard. You're either paying rent or mortgage. You're either having kids in school or will be in school shortly. You've got medical bills. You've got all these things that are coming that run the home. So the other question is, so if you are the asset, you're the greatest asset, if you are the money maker, so you need to start to think about then how do I protect all these bills from incapacitation or if I'm not there. So that's another trigger. So another trigger is if you have someone or people who depend on you financially, number one. But also the other trigger that most people don't think about is if you're building wealth.
Yeah.
If you're building wealth. So I started with the traditional insurance language pitch, but then now let's talk about realities. If you're building wealth, then protection is something that you should be thinking about, because what protection does is that it protects the gains that you have made over a period of time. So you don't have to liquidate your investments to take care of uncertainties, and you don't build wealth on hope that something that life will go well, but you build wealth knowing that you've eradicated the fear of an expected return, turnout of life. I don't know whether that captures the question correctly.
No, that it does. And what you said is pretty interesting because, when you are young, wild, and free, at that time we don't really think about insurance or protection in general because most probably we're just taking care of ourselves. But then, if I feel that having a family is something that is on your mind, it's important to have it. But also, the people who are single and child free, there's the risk of now getting a critical illness or even a disability that doesn't care whether you have a family or not. So I feel like even as long as you have an income or you've started earning some money, it's important to just make sure that, okay, I'm protecting the future value of myself because I am my greatest asset. And just now, in continuation of that conversation, I'm just going to ask this also now to Barak because you've spoken about your family and building the world for your families, for your children, putting money aside for their education. So what is interesting is that many African households, we are expected to provide. You're expected to provide for your wife, your children, and even extended families in some cases, but very few people talk about what happens if that income stops. Yeah. How do you personally think about, and I just want majority of providers here to think about it. Do How do you think about the financial consequences of that specific risk of an income stopping for any reason, one reason or another? Because an income could stop from maybe, okay, someone has lost their job, but now in this case, there's some things that go way beyond just losing your job. Because I feel like if you're still alive and well, honestly, if you have proper social capital and you're still alive and and right now, if you have the internet, there's something that you could do about it. But now there's some ways that income can stop that is beyond what it is that you could do at this very moment. So I'd like you now to tell us how you personally think about that responsibility, and do you think that most men fully understand the financial consequences of that risk, or is it something men tend to avoid? The reason why I'm asking this is because, first of all, majority of I realize protection clients are women, and I don't know if these are conversations men just don't like to think about, like, okay, if something was to happen to me, because most like to think about, okay, I want to make more money. So what do you think around around this? Why do men fully understand, or is it just something they just don't want to think about it? I know I've
Yeah. So,
thrown into the deep end. So this one will be you and Silas.
yeah. So I don't know that I can speak for men or speak for all men. I
Yeah.
can speak for myself.
Okay.
So my experience around being able to sort of provide fully for the family, and in the event that income sort of stops, I think that that thinking again really came alive during the conversation that we had, because I think it
Yeah.
was you were able to point out how you'll buy a car and insure it comprehensively,
Yeah.
look at it as an asset. And the question was, have you ensured that in the event that you're unable to provide, you'd still be able to get money? And I, at that point in time, I hadn't. Just for clarity, I am only what, 8 months in. I think we're only 8, 9 months into our
Yes.
life protection. So it's something that we just
Yes.
took up towards the end of last year. So
Yeah, I remember.
that's the thing that really came alive. And it's not a thought that I had beforehand. I don't know why men aren't taking the option, because both my wife and I make money, both of us provide, and so we both took covers to ensure that both of us are covered. So I honestly couldn't tell you what the thinking is behind why men aren't taking it up.
Yeah.
Um, what I do know is I know a bunch of my male friends who don't have families or don't have children. They
Yeah.
haven't really taken up life insurance, that much I know. Or
Yes.
if they are in employment
Yeah.
ecosystems, they have
Yeah.
their, whether it's their brothers or their mothers, as beneficiaries of whatever
Yes.
life insurance their employer may provide. So I do
Yeah.
know it's something that, at least from what I've seen and interacted with,
Yeah.
it's something that sort of comes alive once there's a family or once there's a beneficiary. Yeah.
Yes.
But as opposed to why in general they aren't taking it, I really couldn't tell you. Yeah.
Thank you for that, Barak. I think now we'll throw it to Silas, because guys, I cannot answer this because I am a woman. I do not know. It's just something that I've observed. It's just an observation, because I realized we are really into, doing the whole protection. I think it's not that we are not investors, but we tend to think of, okay, in case something was to happen to my kids, what would I do? But yeah, Silas, maybe you can also share with us now from your perspective.
Well, I would say let me
Munogo,
start.
yeah, Munogo bake it.
Hata niseme, let me start like Barack.
Yes,
Let me borrow his choice of
yes,
words. I will
yes,
not purport to speak on behalf of all men,
yes.
but I'll talk about mine and a few of my friends as well, the things that I've observed over a period of time.
Yeah,
So one is, I would say, is knowledge.
yeah,
Life insurance is pretty new in this country, in this economy. It's pretty new.
mm,
Um, and if you really think about the people who could afford insurance,
yeah,
it's there are few. There are few.
yeah,
This is the generation. Millennials are the generations that suddenly are beginning to ask questions around insurance. Gen
mm,
X moving upwards. These are guys who either bought out of coercion, they really didn't understand it, and especially the people who could afford the people in the civil service because they could, get their salaries check off deducted, and most of them did not have a pleasant experience buying it. And there was a lot of jargon, there was a lot of darkness around what insurance is all about. But now with information, you have someone who will go online, Google, research, read, understand what is insurance, what type of insurance is good for me. Look at the conversations you're having. I mean, the conversation I'm having with people today around insurance and investment, it's totally different from the conversations I was having 15, 20 years ago with people, you know? So for me, I would say generally for men is, I would say is, or for me, it was lack of knowledge,
yeah,
because the truth is I made a lot of money. So part I'll just to share a bit about my story is that I made a lot of money when I was in my early 20s. Even
mm,
in campus, I really made a lot of money. And we are not having a conversation around of how, but I know I made a lot of money in campus and I made a lot of money in my early 20s. But because I didn't have the knowledge, the know-how, the
mm,
importance of savings, investing, and also the importance of insurance, I didn't do anything.
yeah,
So it kind of caught up with me while I started doing this job. It caught up with me when I started realizing the things I'm telling clients. Actually, I
mm,
am patient number one.
yeah,
I should be client number one. And you know what they said? That the worst should people are cobblers,
mm,
right? So I had to look within. I had to check and realize by the it's a pattern. So for most
yeah,
men, I think it's that. Even a couple of my friends,
yeah,
2 years ago, is it 2 or 3 years ago, we went camping with a couple of very close friends. We are a group of 10 men.
mhm,
Um, so we did camping somewhere in Makueni, and we were having a conversation around, if today we are not there, if today Silas drops dead, so are you
mm,
guys going to take care of my kids? Are you going to be the father figures to my children?
yeah,
You know? And I remember that time I was telling them,
yeah,
as far as finances are concerned, my wife is taken care of. I've got a good life insurance. She's taken care of. She should not ask for money. However, are you going to step in to be father figures to my children?
yeah,
And it became a debate that took about 3 hours.
yeah,
And one of the things we realized is this. And I like that Barak says that around his peers, his friends, he knows some who don't have, and maybe it's a conversation that they need to chime in and to look at how to do it. Because sometimes we look at life insurance as a personal thing, but one of the men said something that I never thought of. He said, Silas, by the virtue that you have insured your family, you have protected my family. And I asked how. He said, because I don't have to contribute to your family regularly, so that money goes towards doing something for my family. So one of the pacts that we had is that each person in that space will have to take a life insurance to protect one another. Not all have taken up to now. I can tell you for sure this is almost 3 years down the line. And these are men. And
Yeah.
everyone there is married, they have
Absolutely.
families. Not everyone has taken. So
Yeah.
it's a continuous conversation. But just like Baraka will tell you, either they don't see it or they're financially challenged. But
Yeah.
perhaps for me is to take note of that and find out what would be the actual reason why a lot of men with responsibilities don't run and dive into it.
Yeah.
Because for us who sit in this side of the table, it's very clear,
Yeah.
but for them, they haven't quite been able to see where to place it.
And I like what you said, Silas, because when I think about my own situation, after my late husband passed away, the thing that really I feel like was why how life cover actually came through is because we had money to be able to, take care of the bills, the rent. His friends could come through the way they could. They did not have the pressure of having to think of how will we contribute financially, because think about it, your friends also have their own families that they're taking care of. So if you are contributing about 200, maybe and 50,000 or 300,000 per month towards your family, I mean, how will your friends be able to do that and also take care of their families? So I feel like it's a conversation we need to have, whether it's men, women, it doesn't matter, that you protecting yourself is actually protecting me as well and my family. And we're just looking out for each other, because most of the time people feel like life insurance is an individual thing, but you taking care of yourself and your family in case something was to happen means it has elevated pressure for me and my family. Because I'm just thinking of if one of my friends, I mean, passed away and they brought me two children today, will I have the capacity to raise two extra children with what it is that I have? But if they had a life cover or they had a plan, it means I can be able to take care of them because there's money that is coming with them, right? So it also removes that pressure of now I need to figure out how I can, divide the already existing resources to everybody else. But how I'm looking at it is that this is an important conversation to have in our circles, because we will have the circle conversation. We'll have conversation on how to invest in bonds or the NSE, the stock market, but we're not having a lot of these actual real life conversations of, in the case of one of us transitioning in our circles, what is next? What happens, right? And now with that, I'll just now also now go into the next question, because now I want us to even get as practical as possible on even where it is that you start. So we're seeing more, families today where financial decisions are shared, like Barak. I know this is a conversation we had with you and your wife when it came to protection, which was something I completely admire, because I feel that if someone is married, it's important to have this conversation jointly, because I mean, it affects the whole family. And I'd like to know now from your perspective, how do you and your spouse, your wife, approach decisions around money, responsibility, and protection and long-term security? So how do you do this together? And including even unexpected scenarios, such as a serious illness. Have you like had to sit down and have that conversation together, like what is the continuity plan in the case of anything, and how do you have the conversations together?
Yeah, so I mean, I think anybody who's married or anyone who's been in a long-term serious relationship will tell you, my discussions are always fun. You come from different households, each of you are raised in, with a different set of rules, you think differently, you've lived independently differently as well. So by the time that you are coming together, so to speak, you're bringing in these two different perspectives around how you'll handle money, and you're trying to figure out how do we make this one. So yeah, it does involve sitting down and coming up with a philosophy and being
Yeah.
open about what it is that you'd like to achieve, and just
Yes.
talking about what the goal and the hope for the family is, and
Yes.
then making decisions based on that. So again, if I'm to use the practical example of how we got onto this life insurance wealth protection
Yes.
plan,
Yeah.
was like I said, I was hosting, on the podcast. We talked
Yeah.
about life insurance and its appeal, and it
Yeah.
became very clear
Yeah.
that we have a gap, and that is something that we haven't provided for.
Yeah.
So, something that we haven't provided for. And so
Yeah.
thereafter,
Yes.
we had a chat. We called Mnyendo. We're able to get into a call with all the three of us. And it was it was sort of broken down to us how it works and how it makes sense. And we were then able laid with multiple options and what's available and why the whole
Yes.
life cover works and why Prudential would be best. So
Yes.
we've been able to then, come up with a payment plan that works for us, or pick up a package that works for us, that doesn't strain us too much financially or strain us at
Yeah.
all financially. So it works within our budget.
Yes. Yes.
And of course, you're picking it as it's not the be all and all, but it's just one other thing that we are sort of working on. So that's how we
Yes.
came to the decision. And of course,
Yes.
as we sort of went through the deciding how we were going to which package for each person, we were looking at
Yes.
what does the contribution look like for the family, what does this person do for the family, what they bring into the family, and those are all
Yes.
things that were taken into account when deciding
Yes.
what the package was. Yeah.
Yes. Okay, thank you so much for that, Barak. As I said, this is something that I completely admire, especially now when decisions are made jointly, because it means that both of you are on the same page. So, Silas, I'd like you now to take us through now practically how this whole life looks like, because Barak has told us how he came together with his wife and had a conversation, and they saw that they have a protection gap, especially with the family it is that they're building and the wealth it is that they're building, and then now they have to go to the drawing board. We have to see the numbers. So how do these numbers look like, and can where can someone get started? Because it's important to also note that someone can start from where it is that they have, what it is that they have, where they are, and then you can let us know, can someone be able to get more covers with time? Because it will be important to, because people are in different stages in their life. Like if I was to start with cover when I'm in, first my first job, and my responsibility has increased, can I add cover that time? So I want you to take us through how this whole life cover works. Yeah, and why was it the best solution for Barak and his wife and his family in general? And then also you can take us through the numbers and where can someone just get started?
All right. All right. So I'm wondering whether to continue from where Barack finished or to start from where the question is. But the solution that Barack is talking about is basically a protection product that covers you and your family for the rest of your life, right? So it's not a short-term policy. It's not an investment policy. It's not one of those ones where you say, I'll put X and get some money back. So this one is for a lifetime. It protects you for a lifetime. And it's designed in such a way that you can pay your premiums for a specified period of time. So one of the key features about it is that we have defined kind of like a funding period. Premiums, the contributions you make towards the policy. So it's kind of like a defined period. So you have 10 years, 15, 20 years, up to age 60 or 65, or for the rest of your life for those who are adventurous enough. But if you choose 10 years, what we are saying is Barack is going to pay, or rather Barack is paying for, let's say, a period of 10 years. You stop paying.
Mhm.
but the cover is with you for the rest of your life. Meaning that it doesn't matter at what point the premature death happens, there's a lump sum that is paid to take care of your family. So if it's within the responsible, there's a period of season of time where there is a lot of responsibilities, and that money takes care. It's an income replacement tool for the surviving spouse. Now, if it happens at old age, then that becomes some form of inheritance that then you get to bequeath your children. Because remember, after 10 years, it means that if you take it today, if you're 30, at 40, you stop paying, but you're covered for the rest of your life. So whenever that happens, it's paid out. So that's one of the unique features. The other one is we say that protection is most valuable when you are alive and vulnerable, right? Because most of us have this conversation around, death. So if death doesn't happen, but life takes a sudden turn, then what else? What's there? So this same solution takes care of you while you're alive and vulnerable, so that in the long season of healing, of recovery, then certain benefits pay out. So we've got two benefits that are inbuilt in the policy. One is this. In the long of a serious illness, a critical illness, so things like cancer, stroke, major organ transplant, renal failure, etc. So we have 18 of them that are covered. So what happens is in the event of diagnosis of any of this, we pay up to the tune of 20 million. I'm going to throw in some maximum numbers, but maybe just to urge our listeners that don't worry about the big numbers, because we look at the numbers so that we get to see how affordable this is. So we pay up to the tune of 20 million in the event of critical illness. We pay up to 20 million in the event of total disability. And why is this important? This was my beginning, part of my beginning points, where I said, if you're alive, but life must go on, so then you need something that takes care of you as the asset maker, as the money maker. So these are the benefits that lie in there. A good example I like to give around this is I do a lot of off-roading, and one of the things that we are consistently told is have a spare wheel if you can carry another spare wheel, you know. And I remember one of these days we were coming out of Suguta Hill, and there's a guy, a pal of mine said, I have a puncture. This is the dead of the night. I have a puncture. So we change his spare wheel raka, then we start moving again. Barely 5 minutes after I moved again, he said, guys, I have another puncture. We all went into stress, because now we are beginning to wonder, so who's got a tire that can fit into this car? So life insurance kind of helps to step into such scenarios where it doesn't matter what life throws your way, you continue living, because families face two emergencies in the event of illnesses. One, the first thing that gets hit is income. So either total loss of income or reduced income. The second thing that gets hit is lifestyle. So the protection in this policy helps to take care of the money bit, so that life continues while you recover over a longer period of time. Yeah. So this benefit takes care of not only death, but while you're alive, and then total permanent disability. For whatever reason, if you get totally and permanently disabled, then we also pay a lump sum to help you adjust your life. But why is this also important is if you've been building wealth for the last 5 years, 6 years, 10 years, 15 years, maybe you've got a pension plan somewhere, you've got some investment you've been doing for specific goals. These benefits are good because what they do is they protect you from liquidating your money market, liquidating your special purpose funds, your shares, selling off your assets at a throwaway price. So they help to protect progress of wealth building, because the money you are given then becomes the foundation upon which you readjust your life, take care of your medical bills, and then know how to live on, because life continues beyond that. Your bills don't, if anything, they adjust upwards because of care. So this is what this protection does. This is what this particular product does, for anyone who has it.
Okay.
Yeah. So Mnyeto.
Awesome. So what it is that I'm getting is, first of all, when it comes to Pro Life, number one, it is a permanent cover, so it covers you for the rest of your life. A second feature that is also very important to note is you pay for a term period, but you're covered for the rest of your life, which is something that a lot of us appreciate because we want to pay when we have as short time as possible, and when we are still young and healthy, because most whole life covers that I've seen, you have to pay till the age of 80 or even 90. But now we want to finish, like, let's say if I was to start right now at 35, and by 45, I'm done if I take like a 10-year term. And another very important thing also to note is that this cover comes through for you when you are alive. That's why it's not only for people who are in families, because as I said, a critical illness is not going to come and check, are you someone who's married or not? It could come to literally anybody. So even as you're building your wealth, you do not want to go and liquidate your special funds or try and, withdraw money from your money market funds when you could easily have had this life cover, which you're paying a small amount to be able to get a large amount. So maybe Silas, just take us through what is the minimum someone can start putting aside? Because I would like us to speak numbers. And then before we go to the next question, how does that look like? Because, right now we're just speaking, but how does that look like practically? So I'll give an example of one of my first policies. I took, I think when I was in like my late 20s, and I'm paying like about 9,000 shillings for a 15 million shilling cover. Right. That was one of the first ones. And I took it because that was what I could easily afford at that time. But as time went by and lifestyle has changed, responsibilities have changed, I've topped up. I've taken now another cover, a bigger one, to be able to match the type of lifestyle that I have for myself and for my children. So maybe you could take us through what the numbers look like, because I've said for me it was about 9,000 for a 15 million shilling cover with 7.5 million critical illness and 7.5 million disability. So maybe you could tell us where someone could get started so that it feels that this is not something that is out of reach, because one of the myths is that this is for specific type of people, but life cover is pretty inclusive. So maybe you could take us just briefly through the numbers.
All right. There is a slide that is to be projected, just a few that at least can get to show the different variations. Awesome. Thank you, Wilson. So this is what you're talking about. It's as simple as this. So the scenario we have here is we have a scenario where you have a life cover of 30 million, a critical illness of 15 million. And then one of the things that perhaps I should have mentioned at the beginning when I was talking about the product feature is that the critical illness and the disability benefit will drop at the age of 65. So on your 65th birthday, these two benefits will drop, but the life cover continues for life. So what you're looking at here is a critical illness of 15 million, 20 million accidental cover, 30 million life cover, and a premium payment period of 10 years. So 10 years is not a long time. 10 years is not a long time. 10 years is 2 presidential terms. Now, what are we looking at is, so we are saying if you're 30 years today, I don't know why Mnyendo is laughing, but if you're 30 years today, you are saying for these benefits, you're paying 29,391 per month for a 30 million cover. If this can go to as low as 4,000 shillings, as low as 3,000 shillings, and we can get to see some examples where they are much, much lower. And if you pay annually, we normally give a discount. We normally give a discount. So let's look at the 30-year-old. If you're paying monthly, we are saying at the end of 10 years, you'll have put in 3.5 million in terms of paying for this protection, but your benefits will be 30 million, 15 million, and 20 million, respectively. That is the life cover, critical illness, and accidental benefit. The other thing that we didn't talk about is that every year, Prudential gives a bonus. And the bonus is meant to hedge against inflation. It's meant to protect your business, your life cover against time value of money, inflation, just to use simple language, inflation. Because 30 million today, 10 years from now will not be 30 million. 30 million in 15 years from now will be less than 30 million, maybe 20 something million. However, we are saying for the last 4 years, we have even 2.5 annual bonus rate. So we are saying that after 10 years, if you're to use the same average, so we're not looking at a higher number, a lower number, we are saying the average of the last 4 years, 2.5% of the sum assured. It's not of the premium that you're paying, is you're saying that you will end up, your policy in 10 years, your sum assured will have grown to 37 million from 30 million.
Yeah.
Right? So that's another unique feature about this particular policy. So we help you to hedge against loss of the purchasing power of your life cover over a longer period of time. Right? So
Awesome.
if you're 40 years old, same policy becomes 44,000. If you're 45 years old, same policy becomes 59. So what are we saying here? We are saying that the best time to buy is when you are younger because you pay less. You pay less for the same benefit. The older you get, the more money you pay. Because for a 45-year-old, you pay 7 million at the end of 10 years. For the 30-year-old, they pay 3.5. This is like 50% less. This is like 50% less for an age difference of what? 15 years. For an age difference of 15 years. So it tells you, if today you are here and you're younger, you can buy this because this is one protection that you can never outlive. I dare say that. It's a protection that you never outlive. Well, of course, not unless rapture happens. You will never outlive this. Yeah. So
Yes,
Wilson, I
thank
don't
you.
know whether there's a slide. There's another slide, Wilson, that has got it's just this one. I think this can be able to show but these premiums, because I know these premiums can seem to be a bit higher, 30K. We can go all the way to 3,000, we can go all the way to 4,000, but they are age dependent.
Yeah.
And the amount of cover that you take also
Yes.
varies. It also affects the premiums to be payable, but it can go as low as 4,000, 5,000 shillings. It's quite an affordable product. There's something, Mnyendo, you asked, can you add to it?
Yeah.
Yes. So if you buy right now and maybe you can afford 7,000, for example, a month, in future, you can always top it up to a cover that you require, a bigger cover. Why and how do you do that? It's because one, you can never put a value to a human life. You can't say that your life is worth 1 million or 5 million or 10 million. It's a question of affordability.
Yeah.
In fact, Prudential can be able to cover you up to 500 million shillings, 500
Wow.
million, 500 million. I have done one for a businessman in Kirinyaga Road who is already wealthy, ultra high net worth, but bought a 500 million life cover. And when I asked him, what is the reason? What is driving you to do this? Because you already seem to have built enough wealth. He said he wants to build generational wealth because he does not have control over whether his children will be able to continue building on the business empire he has built or they will run it down. So he's taking one which he will put in a trust that will run for over 10, 20 generations. They can live off that trust because now he can afford. So
Yeah.
I left there asking myself, if the wealthy can think about this and they already have the money, and sometimes financially we say they really don't need that much, then how much more
Yeah.
do we need this protection? Yes, Mnyid.
Yes, thank you so much for that, Silas. And then it's important to note, because sometimes people think you have to pay for the whole 10 years. Just it's an insurance. That means even if someone passed away in year one, the full amount has to be paid. Yeah. Plus the bonuses which have been accumulated up to that point. It doesn't mean that someone has to wait for the whole 10 years and the payment is only done if there's a transition after the 10 years. Just think about it. If you're to get motor insurance and you get a write-off within 6 weeks, they're not going to say, oh, you've only been having this insurance for 6 weeks only, we're not going to pay. And then another very important point that Silas has brought up is how you can use it to build generational wealth. So it doesn't mean because you are investing, you stop there. Yes, you can have a very good investment portfolio, but if you're looking also to build like sort of liquidity pot for generations to come, life insurance is definitely a very easy way of going about it, because all you need to do is just do your medicals, fill in the application form, and you're all of a sudden just worth 500 million, just like that. So you start with what it is that you're comfortable with. Because I can see someone here is saying the premiums are rather high for a hustler at 30 years old with inconsistent monthly income amounts. Are there figures lower than this? Silas has mentioned, yes, you can start anywhere from 3,000 shillings. So if you are interested to just see the numbers, there's a link that has been shared where you can be able to see what numbers might work for you where it is that you are now. Where all we're saying is just get something solid right now, and then you can get another cover even with time as your income changes. So we go back to Barak. Because Barak, I know you are in your investment journey and you're also in business. I just want you to talk to someone in the room, yeah, who is also in the same journey, in the doing their business, having a family, building wealth, but has not put any protection in place. What will you tell them, honestly, yeah? And what would you advise them around, putting a protection structure in place, even as you're building?
Yeah. I think for me, one of the other things which I don't think I had mentioned before, which was a glaring red flag, so to speak, was that both my wife and I are entrepreneurs. So I think for a lot of people who exist in the regular employment structure, at some point in time when you get senior enough, or if your employer is good enough, there's a conversation about insurance and both health insurance and life insurance, right? But as entrepreneurs, we work outside of that system. So we both have to pay for our own independent health insurances, which we pay. And then I guess that's also why the life insurance just never it was never a conversation, because there was nobody to have that conversation with us. There was no HR to come and say, okay, now we want to put you on this package. And so I think maybe that's also why there's a bit of a delay that decision for us. But when it was apparent, and then when you realize how big of a risk then it is that you're facing in the event something happens, then I think it becomes an automatic decision that it's something you have to do. So I don't think, if you look at it in those terms, I don't think it's even a question of whether I'll do it or not. The question might be, what can I afford? But I think automatically you'd be like, I need to get this done. Yeah. So for us, that's sort of how the insurance element came in. I'd also say that for health insurance as well, it is important, and possibly even, I guess, where the critical illness comes in. So I can give a brief story. I earlier this year in February, I actually had a major procedure I played rugby between the ages of 10 to 26, 27. And so I got there's a joint here. There's a joint here around your jaw called the TMJ joint, and there's what you call a meniscus around there. So because of the contact sports over time, or the collision sports over time, my meniscus tore. So when I was about 25, I started getting like a clicking noise and my jaw would lock. So late last year, my maxillofacial surgeon told me that I was heading to the point where two things were going to be happening for sure. Either one day I'll open my mouth and I won't be able to shut it, or one day I'll shut my mouth and I won't be able to open it. So then I had to then get surgery to get it done, and it was quite a complex procedure, because ultimately it ended up costing I think 900,000 to get done. And it was a lot of money. Of course, it was a lot of money. Insurance, the insurance that we have was able to cover for a majority of it. We're able to then sort of raise the rest and figure the rest out. But an incident like that at a drop of a hat, I mean, if we didn't have insurance, then we would have had to pay that full 800,000 out of pocket, right? So I think insurance does really come in handy for us as well. And so that's just a bit of a story of how insurance has covered for me. Thankfully, I haven't have to rely on my life cover yet, and I hope I never have to.
Please, Barak, you better live very long. The time
I
you should
hope
be
it's a
paying that should be
beneficiary
like
for
when
my
you are It's 90.
Exactly. It should be a beneficiary for my family. So I don't plan to ever
Yeah.
benefit from that money. That's the
Yes.
hope and the plan. Yeah.
Thank you for that, Barak. So, you know what is interesting? Life insurance is one of the things we buy hoping not to use. Yeah. And then also the interesting part is now with Barak being an entrepreneur, literally you have to build your own benefits because as you said, you don't have a HR who's going to sit down with you and say, oh, I'm going to give you medical or I'm going to give you group life. So if you don't sit down and create your own structure, your own protection portfolio, it means then it will leave you exposed. Because in this case, the if now Barak had not gotten now his medical cover, it means he would have had to maybe liquidate an investment that he already had to be able to take care of that. And then it will set him back such a long time because, to build money, I mean, to build wealth, it takes some time. But for it to end, it literally just takes one incident to just wipe out everything it is that you've built. So now to just take it now to the next level, medical cover, I always say it's good to just start with an emergency fund, medical cover, and then eventually life insurance because we never know how life could be. But now you can imagine this one was a case where Barak had to have surgery done. But then if it was something much bigger than that, well, what would have come through? Because when you even think about life insurance, like I keep on saying that it is a way of protecting my economic value because right now there's an income that I'm bringing into the family. The moment I am gone right now, between now, because my children are 5 and 6, for the next, say, about 15 to 20 years, I don't know who's going to be providing for them. Yeah, where's that money going to come from? So it's so important, yes, to put now the medical cover in place to be able to take care of medical emergencies, but then also equally as important to make sure that you understand you are your biggest asset and you're protecting this asset called you, because you are the one who's going out there to provide this income and then putting it in the different investments. So if you are not there for one reason or another, or even incapacitated, it means then there's no continuity in that perspective. So maybe Silas, you could now add from there. You can let us know now how entrepreneurs, something practical, how entrepreneurs can plan around their life covers, because I personally pay once a year because I just want to focus on making money the rest of the year. So I have a sinking fund where I put money every single month and I pay once a year, so I forget about it. And because I know myself, sometimes I even just forget because it's either maybe you do a direct debit or a standing order. But for me, what has worked for me is just paying a lump sum once a year and I forget about it. So maybe Silas, you could tell us now from an entrepreneur's perspective how they could build now their protection portfolio just the way Barak and his wife have done it, because they are both entrepreneurs. We cannot say that in case a business is not doing well with one, there's someone's salary to back it up or someone's benefits to back them up. So how is it practical? How can we practically protect ourselves as entrepreneurs?
All right, thank you for that. Just before I respond to that, I mean, Barak,
Yeah.
HR was just chilling before you brought them into the conversation. Yeah. So, and I like his example.
Yeah.
Protection is not the opposite of wealth building; it's the foundation of it. Yeah. So let me say that again. Protection is not the opposite of wealth building; it's the foundation of it. So it's the foundation upon which you build your wealth. Now, for entrepreneurs, and I'll give examples. First of all, I like his example because it's relatable to many people. Then I'll give examples of some of the clients that I've come across who are entrepreneurs. So one is I've got this client who owns a branding company. And one of the conversations we were having with him around life cover, we really danced around the value behind it until I asked him if today he is to get incapacitated for a longer period of time, what gets hit the fastest? He said, my income, of course, my business might not necessarily close because it's a pretty well structured business, but impact in terms of income will be there. I said, then why don't you have your business pay for this protection? So it becomes like a director's benefit. So that in your absence, then what happens is this, let's say a critical illness or a major illness, then what happens is that the money paid cushions your business from using your working capital to get medical care so that you get your medical help you need and then you can easily recover and come back and continue running shop. So that's the first scenario for business people to protect the running capital of the business. Now, the other scenario that I've seen often over the last 20 years is this. Barack and I are business partners, for example. Then we all have pumped in a certain amount of money into the business. So we are partners. Our families know we are partners. So as recent as 4 years ago, one of my clients passed away and had a partnership. It's an engineering firm. And what happened sadly is that when the spouse and the children went to get part of their shareholding from the business, they were chased away by the partner. Because the fear that the partner had was, if I pay anything right now, I close shop. Because very few businesses can be able to pay off the shareholding of a deceased partner and survive. So for entrepreneurs, for people who are running partnerships, what you can do is you can have the business insure the two of you, kind of like a keyman sort of cover, where Barack has been insured for X amount of money, Silas has been insured for X amount of money. So if Silas drops dead, then part of the company policy is that this money is used to pay off my shareholding, my value to the business, to my spouse. So that two families and one business gets protected by one single cover. Barack's family gets protected because if there's business continuity, then it means that they have a consistent source of income. He doesn't have to start from scratch. He doesn't have to battle in court with my family members because they need money. Two, because there's been a continuity, his income for his family is taken care of. And three, my family is taken care of. So what we have structured for business people is who are partners is that we've had the business take a cover on behalf of the directors to the tune of their shareholding. And they pay for it and it's used to hive off. So it's a very fantastic way to ensure business continuity. Three is the other one that I've seen recently. And this, when I say recently, I mean early this year, is where a business is taking life insurance for its key people, the directors, where 50% of that life cover will be channeled back to the business, and the other 50% will go to the families of the directors. And all the directors are okay with it because it's the business that it's paying. So this ensures that if one key person is not there today, there is business continuity. Right? Now, for the fundamental question around business people is now for people who are in the gig economy, irregular income, then how do I ensure that I sustain my payments? Mnyedo, you've alluded to it partly. You've said you create a sinking fund where you contribute on a monthly basis or as money comes in, and then you pay annually. Now, any policy and this life cover, if you pay annually in Prudential, we give you a discount for almost one month. So it's you pay about 11.1% instead of 12 months. So you pay for 11.1 months. So there's a very good discount there for you. So that's one way business people do it. The other one is they prepay. Even if you're paying monthly, they prepay. So what I've done with my life cover, and I have a salary, is that I have paid 5 months in advance. Is it good use of my money? Financially, no. But it gives me peace of mind that I know if today I don't have my income, for 5 months, I've got enough runway to figure out things on how I'll service my policy, because other than putting food and paying rent, other than the basic needs of my family, it is the next most important thing that can never go unpaid. Thirdly, is for those who are investment savvy and they've got an extra source of income for entrepreneurs, what we have done is once they have taken a 10-year plan we've structured a bond that runs equivalent to the term or even longer. So the 6 months coupon end up paying for their premiums, those payouts, the 6 months. So what that does is you really never have to think about where your premiums will come from, because every 6 months, you know you've got some money to service your policy. Then lastly, I'm sure if you have a conversation with Mnyindo or any trained advisor, one of the things that you will be told with an advisor from Prudential is this: it's not just about taking a policy, but do you have a solid financial plan that incorporates an emergency fund in it? So a lot of Kenyans that I've come across, they do have a budget, they have an emergency fund, but in the emergency fund, they never think about putting their premiums there, because it becomes one of the things that they easily want to get rid of when life takes a turn, rather than it should be the thing that they should always protect. Because if life is already hard without an income, think about now when you're not even there, how hard it can become. So those are the scenarios around business people when they try to think about taking this protection policy.
Thank you. Thank you so much for that, Silas. That was very, very clear, especially now from when you're looking at entrepreneurship from all the different perspectives, because especially when you are in a business partnership, you always ask yourself, are you ready to work together with your partner spouse? Because if they're to take over that shareholding, are you sure that the vision of the business will be maintained? But also now, if we bring it now back to the ground and looking at it from an affordability perspective, we have said that it is important to just make sure, first of all, yes, you have an emergency fund. In case now the income has not come as expected, you have enough liquidity to be able to pay for some time. Because how I look at life insurance, it's almost like a subscription, right? You will get the services when you have paid. Just the way with Netflix or whichever other subscription like Spotify, you cannot say I've been paying for these premiums for the last 5 years. Now I'm not going to be paying anymore, and then you expect now them to continue with the service. So it's important now to put that into consideration, that it follows a sort of subscription model. So you have to think about it as a fixed cost that you have to cater for even when life does happen. I think that is where sometimes the issue comes in, where people are like, oh, I've lost my job, and then I don't know how I'm going to pay for these premiums. But yes, it's important to make sure you have your emergency fund. And then secondly, Silas has said, if you have any investment, you can tie it with your insurance premiums. There are people who tie it to their SACCO dividends. There are others who tie it to the bonds. It's just dependent, or even some their bonuses, right? That this is an amount of money you're going to be getting every year, so you tie that specific life insurance premiums to that. And then also, like what I do, I pay lump sums. I have a sinking fund where I put money, and then I pay once a year, so I forget about it, and then continue thinking about just making money the rest of the year, because I know that in case of anything, I've already made that lump sum payout. Or as Silas also has said, what he does in his case, he prepays. You can pay in advance, which is still okay. You can pay in advance so that you are also assured in case of anything, that amount of money has been paid up. But also very important and critical that Barak had mentioned, please pick up cover that you can also easily afford. So you cannot be having a salary of maybe 300,000 and you're paying maybe 100,000 towards a premium. Yeah, we have also to be realistic and to see how exactly can you take care of. So that is what it's important to look at. Yes, someone has asked, can I start monthly, then later move to annual or semi-annual? Yes, you are able to do that. You can be able to start with a certain, like one frequency and then change later. Maybe you can speak briefly about that, Silas, before we wrap up.
All right. Yes. So what happens is that the policy has got certain flexibilities. So one of them is you can start with monthly, but then at some point if you want to, or quarterly or annually or semi-annually, but then at some point if you want to change to either one of those ones, you can always change, but those changes can only be effected at the policy anniversary, meaning that it can only happen when you started out. So if you started 1st of May, it can only happen at the policy anniversary at the beginning of that particular month. So it's possible for you to make those adjustments as far as premium payment is concerned. Now, can you switch the terms from 10 to 15? No, you cannot switch the terms. What we do is, if somebody wants to take on another cover, for example, is that we normally recommend you take another cover separately because there's no cost to it. You're just building on to the other one. So if you've started with 5, then you can always build up to 10, you can build up to 20, 30 as you progress. So that's the flexibility around it. The reason why also you cannot after 1 year, because most of these changes, especially the increase of the sum assured, can be increased, the cover amount can be increased within 1 year. The reason why beyond 1 year it becomes difficult, it's because then the calculation of the bonuses and trying to reverse and all that becomes a problem. So we normally say after 1 year, it's always cheaper for you as the client to take on another one because there is no much cost implication as far as taking on another one is concerned. You can always build up your cover as you progress.
Awesome, awesome. Thank you, Silas. So this is the last thing I'm asking Barak as we are wrapping up. Barak, could you just tell me, after everything we've discussed today, from responsibility to risk to building wealth, how do you feel about just protection in general now compared to how you thought about it earlier in your journey? Because I do know that you have, you told me that there's times that maybe people from different insurance companies who have approached you with different type of products. How do you feel protection is now compared to earlier in the journey? Do you feel like you're more knowledgeable? Do you feel that you are at a place of less anxiety? Just how do you overall feel about your protection journey?
Yeah, definitely. I think, yeah, before, maybe a couple of months before we had taken this one up, I had been approached by another company that I do have a couple of accounts with, a couple of money market accounts with. So I did get an offer for a life insurance package. However, when I compared the two now, they both required me to put in the same amount of money, but the outputs are totally different. What I get under Prudential now is a lot more money, and it's a lot more beneficial than what I would have gotten with the other partner. So that was really good. I actually didn't know about the inflation, the hedging against inflation. I found that out
Yes.
today, so that was a
Oh.
pleasant surprise for me to learn about. So I've definitely picked up something during our during our session today. Um, and I am definitely a lot more confident. I'm a lot more confident. I am a lot more um I I'm a lot happy. I know we have the structure of,
Yeah.
moving the life insurance product into a trust at some point.
Yes.
We're just waiting for
Yeah.
the birth of our third child so that we could have all of them as beneficiaries on the trust. But all in all, yeah, I'm very confident, I think, with where our life insurance journey is and where our protection is right now and what we've protected. Obviously, we've talked about also, should things go even better, even potentially taking opening up a second account or a third account, as Silas has also noted. But definitely very confident, very happy, and secure. Yeah.
Yeah. Thank you. Thank you so much for that, Barak. And thank you for also taking us through your journey. We are extremely honored because it's been interesting just to see where it is that you started and where it is that you are now, and the difference between, where it is you are at the beginning and now, and even how you've done it now together with your wife and your growing family. So thank you so much for that. And as we wrap up, I'm going to just ask Silas that one last question to leave us with. As we no, I know people want to go and start their Saturday. For someone who's serious about building wealth and seizing life's opportunities, investing, entrepreneurship, career growth, where does protection, fit in the broader financial strategy? And what are the final words you can leave everybody here when it comes to now taking up now this pro life as a way, as a part of their wealth strategy? And then everyone, if you have any question, please just let us know. Just put it in the chat because we'll be answering as we are about to leave. Yeah. So Silas, let me know.
All right. I've noted there's someone who has had their hand raised for a while. I don't know whether we can be able to either respond to a question that they've not been able to answer on the chat. But in the meantime, so where does protection sit in? So I had mentioned before that protection is the foundation upon which you build wealth, because then it becomes the shock absorber that cushions you when life takes an unexpected turn. It's not a competition, to building wealth. Yeah, it's not contrary to, it's actually what helps you, gives you the freedom to run and start chasing other aggressive investments without the fear that you're exposing your family too much. So that's one of the things. If I'm to give a parting shot regarding where protection is or what protection is, my parting shot that wraps up this conversation today will be this: that the right protection doesn't change your lifestyle today. The right protection doesn't change your lifestyle today. It protects your family's story tomorrow. The right protection doesn't change your lifestyle today. It protects your family's story tomorrow. That would be my um, parting shot. Mnyendo, you're muted.
Sorry for that. We can take a few questions. I think there's Catherine's hands that has been up. Catherine, you can unmute and ask the question, and then we can answer any other questions here in the next 5 minutes before we call it a day. Catherine?
All right. Yes, thank you. Thank you, Mundo and Silas and Barak as well. That was a pleasant presentation. You mentioned something, Silas, that one, of course, can top up their coverage. So I just wanted clarity to know, can one upgrade within the same cover, or is it separate covers just to upgrade the entire coverage? Or can the premiums be upgraded in the same policy? That's my question.
All right, thank you, Catherine, for that. So you can upgrade your cover within the first 12 months. Within the first 12 months. So for example, if you're paying say 10,000 shillings a month, you can top that to 20, 30, or you can reduce that to 5, whatever, within the first 12 months. No, let me rephrase that. Let me take that back. So you can top up your cover within the first 12 months. All right. Then after 12 months, you can only take on another one. You can only take on another one. And I explained and I said the reason why that it's structured that way, it's because of the bonus computation on an annual basis. So it becomes cheaper for you to take another one, because if we are to adjust your cover along the way, what we normally do is we look at the premium difference from inception and tell you to pay it upfront so that you can catch up. So we assume you are paying the increased amount from inception, and there is no fairness to you as the person who's buying this policy. So to protect you as the client, what we do is we say after 12 months, take on another one, because there's no cost. It's cheaper for you. You're just building on to the value, because we look at the single life. This single life has got 5 policies, but cumulatively the cover, let's say, is 50 million or 10 million or whatever. So that's how it's structured.
Awesome. Is there anyone who has another question? Thank you. Catherine, I hope you've been answered. I don't know if you have any other question or if anybody else has another question before we wrap up. Is there a question? So where do we sign up for the policies? So I think there's a link that is being shared. Please, yes, Wilson has shared a link. We can just go and fill in that form. Guys, let us know how you feel the session went as well. How do the policies work in a trust? Silas, you can answer that. How do you structure it with a trust? Because I know that's another question. Because if you're going to take a 40 million shilling cover, are you comfortable it being received all at a go? Eh? Will someone need that money?
We normally say that we are all siblings until 70 million is put on the table. Then suddenly we start to realize that your nose does not look like our nose. We start demanding for paternity test. So one of the ways to protect abuse of these payouts is that you set up a trust, and then you name the trust as a beneficiary to this policy. So in the event of death, instead of being paid to individuals, then it's paid into a trust. So the difference between the trust and the will is that a will will divide your estate, into to the various people who you want to gift the estate, but a trust consolidates everything into one vehicle that then from the trust it's able to support different generations moving on forward. So that's how you do it. Maybe the other thing perhaps that has not been asked is that you can still use the same policy to assign in the bank as a mortgage, as a mortgage protector. So normally if you take a mortgage from a bank, what happens is that they require you to take a credit life. It's a life insurance, so that in the event that you die before clearing the mortgage, the bank's liability is taken care of, so they are paid off. So what you do is you use this policy instead of buying another one. You assign the rights of this policy to the bank to the tune of your mortgage or the loan, so that then in the event of premature death, Prudential pays off your debt so they don't come after your family, and whatever remains comes back to your family. The beauty about taking this instead of credit life is that when you are done paying the mortgage, you have a home, but you still have life cover running. Unlike a credit life from the bank, where once you are done paying the mortgage, so are you done paying the credit life, and everything ends at that. So it has got certain other intrinsic benefits that you can use it for, like assigning it to a bank.
Yes. Awesome. Awesome. Thank you for that. And then there's another question for for the business insurances. I'm guessing the life cover where you're covering each other as partners or shareholders, do they apply to general partnerships and limited liability partnerships? The answer is yes. Please, for us to be able to have like a deeper conversation, you can definitely reach out to Prudential directly, or you can also reach out to us at Risk Africa, can be able to guide you in that. And then Prudential has higher payouts compared to other insurance companies. So where do you invest your money to be able to give such payouts? Because I think that has been quite the question, because people never understand, why would I be paying 9,000 and there's a payout of 15 million? Because all of us are usually, when we think of life insurance, the numbers are usually endowment numbers. So the payout to Prudential looks so high. We've gotten people who say that these numbers are too good to be true. I personally know they're not too good to be true, because I've seen Prudential pay out quite a number of claims. But yeah, Silas maybe could touch a bit on that as briefly.
All right. One of my favorite questions. It's a spin-off of It's Too Good to Be True. So one of the things about Prudential is this, that Prudential has been in existence in May this year, we should be turning 178 years old. So we've been settling claims for 178 years old. So if you're old enough to know the Titanic, not the movie, the actual Titanic, we had clients there. World War I, we had clients. World War II, we had clients. We have been in this business since the 1900s. Now, how does insurance work? So what we do is all these funds are pooled together, so that whatever it is that you're contributing towards, we know for sure not everybody is going to pass away there, right? I am at the same time, it's kind of like motor insurance, the way they pool all the premiums. So you'll have maybe 50% of the cars might claim and the other 50 might not claim. So whatever the others that don't claim have to pay for this other one. And then life insurance being long term, we anticipate to have invested this money for a longer period of time to generate enough, and our pool is big, that we have built over a period of time. So we're able to generate a lot of money that helps us to fund these premium payments, or rather this payouts whenever we have a claim. So that's how we're able to sustain this. But generally, most life insurance companies will invest in T-bills, bonds, infrastructure, infrastructure investments, whatever those interest-bearing instruments. Some of it they will do it in some equities. But the comfort is that whatever a life insurance does with their money, it's heavily and highly regulated, and especially a life insurance company. The regulations around it are tight to ensure that the client's money and the payouts are protected.
Awesome. Thank you, Silas. Last question by Connie. I'm interested in taking a whole life cover, but I don't have any beneficiaries. I'm wondering whether and why I should still take it. I know you can answer that one.
Yes.
And please, anyone who wants to take up cover, there's a link that has been shared. Please fill in the form, and then someone will get back to you with the quotation. and yeah, a session. Yeah.
All right. Thank you. Thank you for that. So Connie, there are different ways to look at this. So one would be, I've seen people without families or children to put as beneficiaries, but they've put their parents as beneficiaries. Others have put a sister or a brother, or others have put their nephews and sisters, nephews and nieces, you know, um, to be beneficiaries. So you're doing this for the sake of the people who you love, may not necessarily be your direct family members. But the most interesting one that I know of, that I have seen twice now, was where someone took this. So the first one was a priest who took a policy, and that policy, the beneficiary is a charity organization.
Mhm.
It's a children's home that they support. So he said, these children are my children because I don't have a family, I don't have a wife or kids. So these are my family. These are the children I look after. So his payout goes towards an endowment fund that takes care to run that children's home. So if you are able to book a session where you get to have a conversation, we can be able to unpack and look at how else can we look at to put as a beneficiary to your estate. But the beauty about it is, in the next, in future, if your situation changes, you can always change your beneficiaries at will. All you need is instructions, email instructions, and we change.
Awesome. Thanks for the response. Last question, please. The 2.5% bonus ceases after the end of the term. When does the 2.5% bonus end? Is it until someone dies or until the term is over? Yeah, this is the last question we are taking, please.
So the 2.5, it's
Yeah.
paid out until death.
Imagine
It,
that.
it's not
So
during the premium payment period, it's until death.
awesome, awesome. I hope you've had that, Kathy. So this is definitely a very high value life cover. I've not seen one like this that pays you. So if you live till 100, I mean, your people are going to be paid all those bonuses accumulated up to that point. So I feel like even PruLife encourages people to live even longer. In my opinion, right? So thank you everybody for joining us in this session, giving us your Saturday afternoon. I'm so grateful for Barak for sharing his journey. I've been so honored to also walk you and your wife in this journey. So thank you so much for your time. I'm so grateful to Silas, his wisdom. Every single time you're just dropping the wisdom, and we are so grateful also for you. Thank you for everybody who joined today. Please remember that this webinar is recorded, so we will share it on YouTube sometime maybe next week. And also, if you need any help from Prudential Life, you can just click on the link and also follow them on their page, Prudential Kenya. If you also want to follow us, you can follow me at Le Risk Africa and also Barak at Financially Incorrect. So thank you so much for your time and see you soon. I'm looking forward to the next one. Have a good Saturday. Bye.
Thank you. Have a great Saturday, guys. Bye.
Thank you. Bye.
A good Saturday as well. Bye.